3 years ago, if you had to buy a bond, how long would it take? 2 hours, 3 hours?
I don't know that I can buy.
You wouldn't.
We speak to a lot of people and they say, यार fixed income में क्यों जाना, return नहीं है. So they are looking at equity, and then we say, look, we are a country of 140 crore citizens and there are 140 crore debt investors.
आप already fixed income investor हैं, आपको पता ही नहीं है. Do you know where those insurance companies and pension funds invest? In bonds. The bond size is as minimum as 10,000 rupees.
RBI ने रेट बढ़ाया तो लोन रेट तो ऊपर गया लेकिन डिपॉजिट रेट ऊपर नहीं. And when RBI cuts rate, deposit rate comes down.
Any financial investment you do, even if you give 100 rupees to your friend, there is some risk you might not get your money back.
It has happened to both of us, right? Different times.
You didn't give my money back. Hello, and welcome to the next podcast where we continue to demystify what fixed income and bonds are. Today's session is going to be very exciting, where we attract or we talk about the common man's beliefs, myths, and what we say lack of awareness about bonds, and really demystify this. But who better than my guest today? He's a veteran in fixed income investing for over 2 decades, Mr. Mahendra Jajoo. Jajoo is the CIO of Mirae Asset Management and has run fund portfolios for debt across many institutions like Primerica, Tata Asset, and also being part of the ICICI group. Currently, he heads a lot of funds for Mirae Asset, including their aggressive hybrid fund, balanced advantage fund, equity savings fund, and Nifty STL June 28. Jajoo, welcome to IndiaBonds. It feels like talking to a friend, both being part of fixed income industry for over 2 decades.
Thank you, Vishal, for inviting me. But let me just say that, I met you long time back and then you disappeared, and then I realized you were at London Business School. And then I met you in London when you were working with Merrill Lynch, handling very complex structured products. And then next time I met you was in Singapore when you were heading the credit desk for the Deutsche for Asia Pacific. So you have been through some very highly complicated fixed income structure. But can we start with, making it very simple for our audience and tell them what is fixed income really, because there's a lot of, confusion about it in their mind.
I think the conception that मुझे fixed income आता नहीं है या bond क्या होता है, what is a bond, really is in the people's mind. But it's nothing. It is very simply a loan to somebody, and it has existed for thousands of years. People give people money on interest, either to your friend, to your family member, and a bond is just, जो हम कहते हैं, is a structured format of giving somebody a loan. So a bond is when you are giving loan to a company, the company will give you a certain amount of interest and then your money back. So it's really investing your money as simply, and that is a bond. Everybody does it. But very interestingly, हम बात कर रहे थे, we were talking that people are already fixed income investors, but they don't know. What are those examples? How do you say that the common man is already a fixed income investor?
मतलब एक छोटा सा एग्जांपल है कि किसी को सैलरी मिली और उसने थोड़ा सा पैसा जो बचा वो सेविंग्स अकाउंट में 2-4 महीने पड़ा रहता है. सो फ्रॉम आवर पर्सपेक्टिव इट्स अ डेट इन्वेस्टमेंट, बट उनको लगता है कि यार वो तो ऐसे ही थोड़ा टाइम के लिए पैसा पड़ा है. सो आई थिंक देयर इज़ अ लॉट ऑफ मिसगिविंग्स अबाउट व्हाट इज़ फिक्स्ड इनकम, व्हाट इज़ शॉर्ट टर्म, लॉन्ग टर्म, फॉर व्हाट पर्पज यू आर इन्वेस्टिंग. सो आई थिंक वी कैन possibly discuss and help give some idea about how they should be able to improve their returns even on those investments which we don't even conceptualize as a fixed income exposure.
So the money lying in the savings account earns you 2 to 3%. So basically it is a fixed income instrument, right?
Yes,
that's what we are saying
today. It's a fixed income investment.
So classic misconception, a basic concept of fixed income in India has been fixed deposits. Because I think हमारे parents and grandparents said, if you want to keep money safe, let's go and keep it in a bank in the last 50 years. And banks started competing for that money and giving you some interest, and that became fixed deposit. So if you are doing fixed deposit, which may or may not be the best way to invest in fixed income, is also a fixed income investment, right?
Absolutely. We speak to a lot of people and they say, यार fixed income में क्यों जाना, return नहीं है. So they are looking at equity and then they're looking at real estate and all those things. And then we say, look, we are a country of 140 crore citizens and there are 140 crore debt investors because किसी के घर पे
Wait, let me. So you are saying our population of 140 crores, we are 140 crore debt investors.
Absolutely.
How is that?
And from day one, because आप देखो किसी के घर में बच्चा पैदा होता है, उसका नामकरण संस्कार खत्म होने के बाद व्हाट इज द फर्स्ट थिंग वी डू कि यार इसका जितना आया है वो सब बैंक में एफडी कर दो, राइट?
The last study said there are 3.5 crore individual mutual fund investors, 9 to 10 crore UCC unique codes for equity, and DMAT is about 17.5 crores. You are absolutely right. But one important thing, who do you think is the biggest investor in fixed income?
As I said, every single of us.
Every single person is in.
If you look at the banks and the insurance companies, they are, going to offer you a rate of return which works for them. We have seen oftentimes people complain that जब RBI ने रेट बढ़ाया तो लोन रेट तो ऊपर गया लेकिन डिपॉजिट रेट ऊपर नहीं गया. And when RBI cuts rate, the deposit rate comes down. So bank is going to offer you a rate of interest which suits them, not the investor.
Yes.
But you and me, we are working for the investor. So in my job as a mutual fund manager, we just pass on whatever is the market return to the investor. In your job, you are offering them the best bond which is available in the market. What a bank or insurance company is offering him is what is the best for them and not for the investor.
For the investor.
This is a mystery we should spend some time addressing, because India has moved from 100% paper to 100% digital, or is moving. People have adopted to UPI, people have adopted to digital everything, but in regard to the investments, people are still very old minded. I mean, they are very stubborn in how they think about LIC or bank fixed deposit. I think there's time.
No, very interesting point. So for our audience, the bond market, which means the publicly traded debt market, is $2.7 trillion. And people say, we don't know the market is so big, right? And very interestingly, you spoke about insurance and pension. So just to clarify how you are a fixed income investor, today everybody needs insurance. You need life insurance, car insurance, home insurance, and you obviously contribute to your pension if you're a salaried person. Do you know where those insurance companies and pension funds invest to safeguard your future? In bonds. So आप already fixed income investor हैं, आपको पता ही नहीं है. In fact, for your rainy day saving, also all these institutions are actually investing in fixed income. But coming to your point that people do not know which avenues to explore, right? कि अभी हमें करना क्या है, कैसे करना है. So why do you think allocation to bond or fixed income is important for a person?
Yeah. People know that they need to invest in fixed income. They are completely disconnected with what are the new options which have, for example, debt mutual funds or the fintech online bond platforms.
That's right.
There is need for awareness for that. Now you look at our entire history. We are one of the oldest civilization, and then you look at the traditional pattern that you have. घर में आपके गाय भी होगी, बैल भी होगा, बिकॉज आपको खेत जोतना है तो बैल करेगा, गाय तो खेत नहीं जोत सकती. आपको बच्चों को दूध पिलाना है तो बैल तो दूध नहीं देगा, गाय दूध देगी. तो आपको गाय भी चाहिए, बैल भी चाहिए. लेकिन आजकल जो ग्लैमर चल रहा है,
yes,
और ये इसमें इतना रिटर्न आ रहा है, तो पीपल आर नॉट लुकिंग एट a structured, disciplined, diversified portfolio allocation in line with the risk profile, etc. People do that kind of an effort for everything else they do. I have seen people जिसको रात को आपको डिनर पे बाहर जा रहे हो तो 3 घंटा वो रिसर्च करेंगे कि कौन सा रेस्टोरेंट है, उसकी रेटिंग क्या है, उसका प्राइसिंग क्या कंपटीशन है, विच ऐप इज़ गिविंग द बेस्ट डिस्काउंट. बट जब इन्वेस्टमेंट करना होगा तो घर के सबसे नज़दीक जो बैंक है वहाँ जाके एफडी कर देंगे.
Fair enough.
Right.
Fair enough. So basically, the main criteria of fixed income investment is portfolio diversification. Classic finance says, let's say in India, we are obviously crazy equity friendly, कि you get high risk, high returns, but that come with high risk.
Yeah.
And fixed income is an asset class which gives you regular stable returns with low risk. So as you don't put all eggs in your in one basket, you are saying कि whatever your money is, learn about it, spend in equity. No one is saying that, but some part has to be in an asset which gives you regular return and less volatile, so as to speak. So that's why we need to the Guy Bhel wala episode ki you need a balance across whatever you have.
Let us discuss another example
Yes.
of why the balance is required. Okay, so you and me both have grown together, always hearing about how the EPFO, which is the Employees Provident Fund
Yes.
organization,
Yes.
is struggling to generate the required return
Yes.
to be able to service the target return. And then some wise men decided that let them also take exposure to equity. So they started with 5% exposure to equity. Maybe I think it has gone to 10 or 15. So equity market has done very well. Because of that, we no longer hear about EPFO struggling to meet its target return. So equity has obviously acted as a positive kicker.
Of course.
Right? Now what happens? Suppose I am having a provident fund, you have a provident fund. So we say, look, एक तरफ तो उनका कभी रिटर्न ही नहीं जनरेट होता था जितना चाहिए. नाउ दे आर रनिंग अ बिट ऑफ अ सरप्लस. सो व्हाई नॉट आई इंक्रीज द इक्विटी एलोकेशन फ्रॉम 10 to 20 to 30.
Yes.
I will need that money when I retire, right? So you can take one example and ask anybody कि ठीक है फिर इक्विटी में 100% कर दे तो रिटर्न विल बी हाईएस्ट. विल ही से नो हाँ कर दो. He'll say no थोड़ा सा आप एलोकेशन बढ़ा दो बट लेट इट बी सेफ.
Yes. Yes.
Now what
because
is
that is about my
safety?
future, my later life.
Right.
So I want balance.
Where
and
is that
safety
coming from?
It's
From the bonds?
From bond side. Yes.
The biggest challenge is that only if you are a salaried person you can do EPFO.
Yes.
If you are non-salaried person you can do PPF, but there is a cap on how much you can contribute.
So
now
where else do you go?
Now there is NPS.
Yes.
So people say अच्छा ये सब छोड़ो मैं NPS में चला जाता हूँ. But NPS gives you very limited options.
Yes.
And you have no control on where you invest. So when you are investing in NPS or in EPFO or in LIC or not LIC but exactly life insurance, look, you are not able to match your risk profile and your risk horizon. You are having to choose from what they offer and not what you need.
When India has been a developing or a country in the last few years, and now we are developing pretty rapidly, and let's say the GDP is around $4 trillion, and if we have to go to $7 to $8 trillion, there is a natural wealth effect which is created. Matlab, the standard of living has gone up. People are have more disposable or investable income, right? So traditional methods which might restrict you either through choice or do have lock-ins, right? जैसे आपने कहा कि the lot of NPS and EPFOs, there are lock-ins. You can't transfer. That people will have to move to more sophisticated ways of investing money.
Yes.
And allocating part of their portfolio to fixed income assets. So which brings me to the next point as to if we look beyond the traditional methods, what are the methods? Obviously there are two big methods in fixed income. One is via debt mutual funds. So I would love to hear from you as to how in different ways people can invest in debt mutual funds. And there's recently something around taxation. तो अगर आप उस पर थोड़ा सा elaborate करें to explain to our people, that will be amazing.
See, as we said in debt mutual funds, first of all you have 16 different categories of debt funds. So right from overnight fund,
Okay.
where you can invest for one day, to long duration funds. So you have the entire range, and generally in fixed income the risk is defined in two categories. One is the credit risk, the other is the duration risk. So duration risk is the maturity of your portfolio. The higher the maturity, the more the volatility due to interest rates.
Just making sure everyone understands. So duration means how long is the maturity of your investment portfolio. The higher tenor or higher maturity, higher number of years you invest for, it's riskier.
Yeah.
Right.
So again, the longer the investment horizon, credit risk is that much higher because it's very difficult to predict what can happen in 10 years time. क्या लगता है कि आज मेरा NAV या मेरा जो इन्वेस्टमेंट वैल्यू ₹2 नीचे हो गया तो दुनिया खत्म हो गई, ऐसा नहीं है.
And I think there's a misconception that if you are investing in fixed income or bond funds or direct bonds, that it is secured and guaranteed.
No.
So firstly, there is no free lunch.
No.
Any financial investment you do, even if you give 100 rupees to your friend, there is some risk you might not get your money back.
It has
Right.
happened to both of us, right? Different times.
You didn't give my money back, right? No, that's not the point. But the point is, you simply understand that if you're lending money to a company or something, there are certain risks attached to it, and you should be cognizant that it is not guaranteed by government. It is not 100% safe or secure, right? So coming back to mutual funds, firstly, I should tell you that people think that mutual funds, debt mutual funds, and direct bond investments are opposing to each other. ऐसा कुछ नहीं है. You know, like equity, mutual funds and direct equity exists. I think today both of us are sitting because we think the asset class is so big that depending on what you want to do, you can go for a debt mutual fund, and we have a champion sitting here, or we will talk more about online bond platforms and what IndiaBonds is doing. You can create that for yourself by investing in direct bonds. So mutual fund, if I'm a common man, what do I need to do? What do I need to look at?
For different types of investors, say for example, very high wealth investors, for them a direct bond may be a better option because they have the, resources.
Some knowledge, know-how, resources
So
to access.
different scale, and then let's talk about a regular investor. Okay, he will have basically some money to invest for long term, some money to invest for short term. So mutual fund gives him all different options, and he can, if he has money only for 3 months, he can invest in an ultra short term fund. If he has money for retirement, maybe he should invest in a long term fund. The other advantage of mutual fund, for especially for the retail or smaller investors, is that there is no pressure on them or no need for them to buy or sell individual securities. Now, debt market is largely institutional in nature. So they can just put a subscription request and they can put a redemption request. But I believe you people are now doing some pioneering work in giving a online bond platform where retail investor can have as much ease of transaction as they have in equity now.
No, absolutely. So I'll probably talk about that. So online bond platforms like IndiaBonds, firstly, we are SEBI regulated and registered. So we have to follow rules, compliance rules, audit rules, and within the regulatory framework it operates, right? If you remember 3 years ago, if you had to buy a bond, how long would it take? 2 hours, 3 hours?
I don't know that I can buy bond.
You wouldn't. Please note this. Fixed income professionals in the country are saying they wouldn't know where to buy a bond 2 to 3 years ago.
Direct investment.
You can never do a direct bond.
Typically, you ask a guy on the street.
You ask a guy on the street, you call 10 brokers, then you don't know which bond you can buy, what is the pricing. The entire mechanism would be he'll send you a quote, you will respond, this is okay, then you exchange your deal. So the whole offline process of buying a bond in India 3 years ago was 2 to 3 hours. Now it takes 3 minutes. So thanks to online bond platforms, which are regulated entities, any investor can come on the platform, and now the bond size is as minimum as 10,000 rupees. Till a year and a half ago, it was 1 lakh was the minimum amount, and I think a lot of good work has been done by the regulatory framework that any common person can come on a platform like ours, choose from 60 to 80 bonds, click and buy.
Right.
And you have enough choice, you have enough information. More importantly, thanks to the digital infrastructure in the country, this is, you'll be surprised, this is better than the equity market. When you click buy, your money does not go to the platform or to any stockbroker. Your money goes directly to the government clearing exchange house who credits the bond to you.
Yep.
So I think what debt mutual funds have done in this country for over 3 decades, I think it's a very humble start that we've made. And the lakhs of investors you already have, you've done thousands of crores of investment. So it is actually providing more or capitalizing on the retail investors' capital base, which actually helps companies raise money, I think provides more liquidity to the market, gives more transparency, and for an individual, direct bond investment is possible. From here, I think I want to move on to the next topic, which is very interesting. So as debt mutual funds made debt investment thoda famous, bond platforms have come up, you see a lot of these alternative investment choices. So for an investor, it's very confusing. कि मैं डेट म्यूचुअल फंड में जाऊँ, वहाँ आप 200 तरह के आप दे रहे हैं, मतलब बुफे है पर आला कार्ट भी है. आई गो टू अ इंडिविजुअल बॉन्ड प्लेटफॉर्म, ऑब्वियसली विल कम टू व्हाट इज इंपॉर्टेंट बिफोर चूजिंग. और बीच में ये लॉट ऑफ अरे कम 18% मिलेगा आपको, कम फॉर टिपिकली दीज आर ऑन रियल एस्टेट फाइनेंसिंग, दीज आर ऑन स्ट्रक्चर्ड प्रोडक्ट्स which are also sold offline through broker channel and now even online. what is your view for a common man investor, for a retail investor जिसके पास 1 लाख 10 लाख रुपए डालने के लिए है? What should they look out for when these kind of, बोलते हैं ना ये दवाई पीजिए आपकी लंबाई बढ़ जाएगी, you know, so it's that kind of thing. Come, you'll get 18%, no risk. So what do you think of these?
So Vishal, I think I have some ideas on what to say about this, but you know, I'm a debt fund manager, and you have spent so much time in international markets looking at some of these things first, and I think you are the best just to maybe elaborate further on that, because you also understand what are the challenges with this.
I think in my opinion, the fact that these are alternative or structured, there is no free lunch. So 16-18% जो दे रहे हैं आपको, that is usually for more a sophisticated investor. A government bond is 7%.
So there is something called fine print. वो पढ़ना चाहिए शायद लोगों को, या पढ़ पाते हैं?
So there are two things about the fine print. One is what we tell is, please avoid unregulated platforms. As digital has expanded, you know, whether, you know, mutual funds have done beautifully in this country with AMFI, with mutual funds, sahi hai, you have complete regulation, organized as to what you are getting. Distributors are ARN kind of membership holders. So AMFI has done a phenomenal job. Equities, maybe you can't just go and buy equity from everybody now, right? Either you need to buy from a stockbroker or an AP. Bonds mein kya hai, because it's still kind of coming together, we will advise not to buy from platforms that are not regulated by SEBI. Usse kya hota hai, kuch, if there's something to go wrong, there's nobody to go to. Secondly, do not buy unlisted fixed income. So there is a lot of unlisted fixed income ka prevalence. Listed bonds gives you again an additional layer of SEBI. If something were to go around, there is a disclosure norms, etc. So unregulated and unlisted investments jahan ho, your radar should go up. They could be relevant, but either the minimum size of ticket should be like 10 lakhs, where a person is more efficient about managing their own money. Accredited investors ko kehte hain. So fixed income ke naam pe, I think jo structured products, complex products, or very highly risk products should be avoided. If you want to start this journey, debt mutual funds are the best way to start the journey, or buy a government bond or buy a AAA bond to start, understand fixed income, and then go into the deeper credit risk taking point of view.
I think important point that you are making is that when you are stepping up your return expectation, you have to take higher risk.
Yes.
Even if you are prepared to take that high risk, you need to also understand what is the risk you are taking.
What is the risk?
And whether you have the ability to understand what risk you are taking. I think that's the important point here.
No, absolutely, because I do find that some very high yielding products are offered, which are usually suitable for sophisticated investors, bank credit treasuries, AIFs, and people who have done this for 10-20 years. If you offer a 18-20% to a normal man saying invest 1 lakh rupees in this or 10,000 rupees, there's clearly something wrong. So these are dangers. There's nothing right or wrong, but it's your money and you should take care of that, right? So now investing in fixed income, we said 2-3 things. One, we said duration, ki tenor kitna hai. You said about the credit exposure. So can we elaborate on how does a common man access credit exposure, credit ratings, etc. So a little bit on that will be great.
So I think there is a whole different word when it comes to fixed income investing. So there are credit rating agencies, there are credit evaluations. For example, most of the debt mutual funds like us work on internal models.
Yes.
And so on. So at this stage, let's say if there is a regular guy on the street and he is earning, let's say 25,000 a month, and then he has to invest 10,000 a month and do an allocation of, let's say, 65% equity, 35% debt. It boils down to him investing 3,500 rupees per month in debt.
Yes.
What I can say from my general experience is that it remains in the savings account of his bank, and if he is very adventurous, he will make a 3 or 5 year bank.
I think what we encourage is also use your own time and self-learning. Today what has happened is, you know, thanks to technology and information is freely available. So according to me, the two things I want to talk about, one is some basic pointers, you know, when you're buying a direct bond, in this case, is credit rating. Credit rating simply आपका CIBIL score होता है. The higher the CIBIL score, the lower loan का rate आपको मिलने वाला है, right? So simply the higher the credit rating, the lower will be the return for a company. So they are AAA, AA. I think that you should look at. Obviously, you should look at Listing के बारे में हमने बात की, should be listed regulated bonds. There should be secured bonds are better than unsecured bonds, and things like that we should really pay attention to. Is that, that's what I'm saying, when you want to invest in fixed income, what are some of the pointers a person should look at?
Sure.
Also, from an education point of view, I think हमारे इंडिया में इक्विटी के बारे में इतना लिखा जाता है. इफ यू पुट अ टीवी चैनल 98% इज टॉकिंग अबाउट विच स्टॉक, व्हाट स्टॉक एंड हाउ. On India Bonds, we formed actually a humble effort, Bond University बनाया हमने, Bond Uni. So which has a lot of blogs, videos. Even this will go up on that as an educational piece. So people can come and learn. They can put terms and learn about fixed income. That opportunity is absolutely there, right? So from here we'll move to the next section, which is called the rapid fire section. It is nothing like what we see in Bollywood TV shows. ये हम simply एक दूसरे दो दोस्त बैठे हैं. We're going to ask each other some question. So why don't I go first? Let's go. What's one common misconception about bonds that drives you crazy?
I think my problem is having no conception, because most people just stop at bank fixed deposits.
Okay, so you're saying there is no
There
concept.
is no idea about bonds.
What is the best personal investment you have ever made?
Well, that's something I don't want to talk about here.
Okay, fair enough. My best personal investment is my education. I think people should get knowledgeable and educated. I think the MBA I did was a human asset class. I think I want to carry for life.
That's the answer I wanted to give, but I thought it will be out of context. So
No, it's. What do you think of fin-influencer trend in India?
that I think is very encouraging, because it's something which is evolving. SEBI has a regulation on what kind of influencers we can deploy.
One line about the Indian economy.
A structural theme for next 50 years.
Amazing. So very, very bullish. Okay,
Yes.
over to you.
I think, what is your favorite financial quote that you live by?
It is actually not a financial quote. It is from a James Bond movie. It says, "Die another day,"
Yes.
which means don't bet everything today. कि कल आपके पास पैसा नहीं रहा invest करने के लिए.
Don't put all your
eggs in one basket. Always come back to the game.
So, what is your go-to strategy during market volatility?
My go-to strategy whenever the market volatility hits, you have to decrease the size of your investment and bet. So from a finance perspective, you should, when there is big volatility, so if you have 100 rupees invested, take 50 off, because आपको पता नहीं है क्या होने वाला है, or volatility says there's uncertainty in the market. The other thing is, I go for a run and exercise to calm the market down. One is managing your portfolio, one is managing your own emotion. So I think exercise is very important. Fitness is important.
My final question to you would be, what is one thing that you would have done differently if you had another chance in terms of markets? Huh?
In terms of markets, I would have started investing when I was 21 years old, which I didn't, because I think when we were younger, the information, the ability, the access was not available. So the compounding effect that money has, even in fixed income, अगर आप 8% per year बना रहे हो, so 20 years में, you can make huge money. So I think that time you were busy doing what young people do,
Yes.
and no one told us that you should start investing.
Very correct. And I'll just add to that, that also, when you find a good investment, to, hold it for long term.
For long.
I think we have, at least I've made this mistake, sell out the winners very quickly. And now when I hear the champs say that, I realize, okay,
Yeah.
if I had held on to my first Infosys buy,
Okay.
maybe I won't need to do this.
Yeah.
today.
So I think we tend to make small profits. It gives us that kick.
Yeah.
And we draw down our losses कि अब ऊपर आएगा, अब ठीक होगा, अब ठीक होगा. So that loser's fallacy of bounce back from a technical term, I think that is something. So very interestingly, Jajoo, we are sitting in December end. So usually calendar years have this perspective about how things have been and what is the outlook. So I do want to spend 5 to 7. I do want to spend time on maybe a quick review of 2024 from a fixed income macroeconomic perspective. As usual, we can talk about anything, but keeping it a little bit to the fixed income and the outlook for 2025. I mean, share your views, and I'm happy to share mine after that.
So I think 24 has been a great year for fixed income markets in particular, because it's after a long time that the bond funds have given double-digit return, right? And that has been on the back of improving inflation scenario globally and in India. in spite of the very serious geopolitical disruptions, the commodity prices have generally behaved well. So it has created an environment where after hiking rates for the last couple of years, most of the global central banks have been beginning to cut rates in the second half of 24. Markets have anticipated that. So I think 24 has been a very good year for fixed income. What is even more exciting for me is that I think 25 will be another exciting year for fixed income, because I think the rate cut cycles have just started. I think there is reason to be more optimistic than be worried about the 25. Obviously things can change, in which case you have to keep revising your outlook. Especially for India, I think India is in a structural up move. We have a very strong economy driven by domestic consumption, but then we have seen early signs of a bit of a slowdown.
Fatigue, yes.
And we have seen that last quarter the GDP growth dropped to something like 5.4% if I remember correctly. That's quite a slowdown, and now everyone is saying that no, next quarter the growth will revive. But I think the bottom line to me is that the central bank will have to now divide its attention and put a little bit focus on growth, because now I think that we are on the treadmill, and just to be able to maintain growth we have to put in some extra effort. The second part is on the inflation. Now inflation, I was analyzing the last month's inflation number. Inflation has fallen from 6.5 roughly to 5.5 roughly. The one single product that has made the biggest difference is the change in the tomato price. तो आप ये बोल रहे हो कि आलू टमाटर प्याज अब हमारे देश के इकोनॉमी का डायरेक्शन डिसाइड करेंगे. सो आई थिंक एट सम पॉइंट द सेंट्रल बैंक्स विल हैव टू also consider the core inflation and the volatility in the food inflation, right?
Yes.
If you are talking of India as a structural story, then you have to also remember that every structural story which is successful has one definite result, which is a downward drifting interest rate, right?
Yes.
So you look at all the economies which have graduated from emerging to emerged or developed, whether it is South Korea or any of those examples. Over a period of time interest rates have come down.
Yes.
And in case of India also, as the Indian economy has got stronger and stronger drift. You remember in 95 we had 15% 10-year yield. In 2005 we had 10% 2-year yield, 10% 10-year yield. In 2015 we had moved to 8-9%. Now we are in 7-6,
yes.
7-8%. So by all means, if the India's structural story is there, by 27-28 we should have 5% 10-year yield. Therefore, if you are a long-term investor, believe in India's story, just don't bother about 24-25. Buy the longest bond possible, and like that Swedish bond which went from 100 to 170, you can.
No, very, very valid points, and maybe I'll touch upon. So in 2024, fixed income markets saw phenomenal developments, right? We saw the Bloomberg index inclusion, we saw JP Morgan index inclusion, and global indices will get us billions of dollars. We saw the flourishing of the market, the whole bond market going 2.7 trillion. And remarkably, the online bond platforms are taking fixed income asset class to the common man. According to me, in 2025, fixed income is best when it's boring.
Yes.
Low volatility. So the consistent rates that have been held in the country are phenomenal for developing and realizing returns in fixed income. Secondly, I think we are close to at peak of interest rate cycle. So most likely the next step for RBI is going to be a cutting of interest rates, which is great for fixed income. We have potential for capital gains. But also I want to highlight 2 or 3 things that I think structurally as an industry we might see. So one important aspect is, I think we touched upon earlier, distribution of fixed income products, at least for us in bonds, is not under a framework unlike equity and mutual fund. I see that development happening very, very strongly. And secondly, as you said, any economy that grows and then you usually have these little down declines, you might see some impact, what we hear from credit in the MFI sector in the country. So always, do due diligence on your investment. So I think the big 2 themes will be, if I can say, the fixed income celebration or a lucrative investment will continue. and more structural changes for democratization is going to happen in India. So, viewers, thank you for joining us on this amazing session, which we've tried to demystify fixed income. We've tried to say how a common man is already an investor in fixed income. So don't be scared, don't be afraid by it. Everything we've said is not advisory. Obviously use your own discretion, talk to your own advisor before investing in any of these strategies which we may or have spoken about. These are our personal views and not necessarily institutional views. But I hope it's a humble effort in helping in education of fixed income and bond and debt mutual fund in this industry. And it is such a pleasure, Jajoo, to host you and the time that we spent together.
Sure, and it was equally a pleasure for me, but that before we end, I want to make a very strong disclosure that I am a fund manager bound by SEBI regulations. So, whatever I say, they have to be subjected to the disclosure requirements, and investors should not take any of this as an advice or a recommendation.
Yes.
They should consult their advisor. If any of those things come out like that, it's not intended to be. It's just a friendly discussion with my old-time friend Vishal. Thank you so much.
Thank you, Jajoo.
Thank you.
Wish you a Merry Christmas and a very Happy New Year for
Happy New Year,
2025.
everyone.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.